Right. Hey guys, this is a new webinar that I've done, and it is about profiting from buy right options. I'm not sure if most of you have heard about that before, but it's basically covered calls. Okay, and the difference is going to be we're looking at specific stocks that we use and how to manage those. All right, so let's get started here, and let's do it. All right, so what can you expect? I'm going to show you how you can make consistent returns monthly based on margin capital at risk using buy rights as high probability trades, okay? And what are you going to learn for this? Number one, how to select this, how to select solid stocks suitable for buy rights. Number two, the process of selling covered calls to generate additional income, how to manage your positions to maximize gains and minimize losses, capital requirements and risk management strategies, and detailed entry, exit, and stop loss criteria to maintain consistency. Okay? All right, so stay with me to the end. I have a special bonus. I think you'll like it. And as we go through this here, I thought about how, why specifically you guys are here, okay? So reason number one, you're interested in learning new strategies that'll take your trading performance to the next level, so you can finally leave that career behind. You've seen, heard about, read about others making money in trading, and you know you can do it too, but you're just not seeing your account grow fast enough. And number three, you've tried different trading strategies that you thought, okay, this is it, only to discover that it's just not getting you to the place where you're getting consistent results, okay? All right, so with that, let me know what you, which one of these is most near to you, okay? Number one, interested in learning new strategies, desire to see your account grow, or find the right strategy that provides the consistent results for you. Okay, number one, Cap, thanks. Pete, 3, perfect. Okay, anyone else? Robert, 2, okay, we got 1, 2, 3, that's great. Okay, perfect. Okay, so let's go through this here. I'm a regular guy, and it's my family on the left, and my other family on the right. It was an MBA program a long time ago, okay? So regular guy, love to trade, and hopefully you will too. All right, so let's start with mindset, okay? So imagine consistent income generation month after month. Number two, watching your account grow as you implement a proven buy right strategy. And number three, becoming a disciplined trader who makes informed decisions and achieves steady profitability, okay? So those are really, really important. And I think that with this strategy, you're going to obtain that, okay? All right, so let's talk about the advantages of buy rights. Number one, combining stock ownership with covered calls to generate additional income. Number two, reducing the cost basis of stock holdings. And number three, potential enhanced returns while managing risk, okay? So in the category of options, okay, this is a tier 1 option, so it's very, very conservative on these positions, right? So basically, you are taking stock, in positions, and then using options to enhance your premiums to get more money out of those positions, okay? And again, it's a tier 1, very conservative option strategy. All right, so with regard to options rate of decay, this is really, really important because it uses, even buy rights use these option decays to enhance the profitability. Okay, so in this deck here. You see from 68 days to 33 days, the rate of decay is 34%. And this is just, just a standing, don't think about just volatility or a general move right sideways, and this is how it works. Okay, so from 33 days to 5 days, the rate of decay is 57%, and from 5 days to expiration, which is the kind of the sweet spot for this, the rate of decay is 100%. Okay, and then we'll be talking about 7-day, pretty much 7-day options, and sometimes we do monthlies, but you know, most of the trades that we do here is just basically weekly trades. Okay, all right. So so buy right, right? What is it? The buy right strategy is in effect a method that combines potential for long-term gains, okay, and owning solid stocks with an immediate potential of option trading. Okay, the strategy allows you to earn money on returns, right, more than, you know, basically the stock can give you. Okay, all right. So number two, by purchasing shares of solid stocks like Amazon, NVDA, Google, right? In this scenario here, the purchase of these stocks, like let's say Amazon, okay? For instance, the Amazon currently is around $180, I think. It's actually a little bit lower. It's around $177, and basically you can buy those shares. And the investment is $18,000. Okay, so it's, you know, and this is a big stock. Okay, and we use smaller ones as well. All right, so it doesn't take all your capital. Okay, and the idea is to hold that stock that is expected, you know, over that time, basically 7 days, and it generates income, because what happens is these positions decay over that week, and then we put them on again, and then we put them on again, and we put them on again. So every week we're putting on these stocks, and as long as they're solid stocks, right, and we'll talk about the criteria for that, they work very, very well. Okay, all right. So so what about writing? Okay, the right. So these are called buy rights, right? And when you say write on an option, you're basically selling an option. Okay, so after you're purchasing the stock, you move to the right part of the strategy. This involves selling call options against the shares you own, specifically weekly call options that expire within a week. By doing this, you collect a premium up front. And so in this example, you would sell a call option with a strike price of $180, you know, $180 strike price, and earn a premium of around $300. So the premium is yours to keep no matter how the stock performs at all. So you will always get that premium week after week after week, and that's the beauty of this strategy. So now let's walk through the current scenario. You bought these 100 shares of stock of Amazon, costs $180, or today it would be $177. Right, and then you receive a premium of $300, and so the Amazon share price remains below 180 by the end of the week. The option expires worthless, and you keep those shares of stock. Okay, if I'm sorry, the premium that you receive. If Amazon price rises above $180 or $177, the option may be exercised, which means it'll get taken away from you. Okay, but you still get to keep that premium. Okay, so in this case, you're making a significant profit. You retain that $300 premium as long as, you know, the stock doesn't go way up, and then additionally your initial investment is being returned. Okay, so that's basically how it works out. So now the trade is considered a high probability trade, and so that's the beauty of this strategy. All right, so let's go through the probability factors. Okay, number one, stock selection. Okay, that's very, very important. So we're choosing fundamentally strong stocks, basically that are good growth prospects. Okay, so by choosing that, right? You have that, you'd have that advantage, okay? With option premiums, the next focus is on targeting options. The attract, basically you want to get options that have nice premiums. These premiums enhance your income, as I mentioned before. And then the other part of this is market trends. So this is a bullish, basically a bullish strategy, and you want to see the stock, right, move from left to right upward. Okay, so but sometimes again, what'll happen is if the stock moves above the strike price, right, it can get called away, as I mentioned before. But what we do is we actually add a debit to that stock, so we keep it in the portfolio, and then we just keep going on and on and on. All right, and yeah, sometimes you're going to get a debit, and it's going to be a loss, but over time, and I'll share the profit and loss on this over time. You'll see how well it works. Okay, and so so market, the other part is the risk management, and that's the part where you need to decide whether you're going to let the stock move, go away, or take a debit on it and then move forward again. Okay, and that's what we do basically. We take those positions, and we some of them will be worthless, and some we'll have to set a debit, but it's okay because over time it works very, very well. Okay, all right, so let's go through the entry exit guidelines on this. Okay, and this is really important. So number one, as I mentioned before, you want to select really good stocks. Okay, and the ones that we're using today basically are Amazon, NVDA, BRT, Morgan Stanley. These are very, very well-known stocks, and these are the ones that we're using. Okay, all right. So you definitely want to select the best stocks that you possibly can. Okay, number two, look for stocks basically with a daily 50 SMA, which is above, right, the daily 150 SMA, right? So if the above criteria is met, you sell a call, and you basically one or two strikes above the current price, giving you at least a 2% return. Okay, on those positions. Now you're getting those 2% returns week after week after week. Okay, and that's the process there. Okay, so adjusting or rolling. Okay, and this is what we do. So when we adjust or roll, basically the roll position, weekly or monthly, if it still meets that criteria, so you capture that additional premium. So we roll the weekly options on Thursday afternoons, and then in monthly options and week basically before the expiration. Okay, so today we're going to be rolling those trades because it's Thursday, and then we sometimes we wait until Friday to do that, to get the right position. But we definitely hold those stocks and continue rolling those over and over again. Okay, so keep in mind, and also closing positions if the stock drops below the 150 SMA. Okay, so that's basically a level there, right? When it hits that floor, we close that stock and move on. Okay, all right. So let's look at the performance. Okay, so this, I know it's a little small. Okay, so as of 8/19, right, we had an initial portfolio, and this is over 2 years, I believe. I think it's it's about 2 years old, maybe a little over 2 years. But we started with $150,000 portfolio. Okay, and the actual gain on that was $62,000. Okay, so it's basically a 42% move on these positions over over a couple of years. So if you compare that with what the market does, which is about 8 to 9%, right? You're looking at probably about 20% every year that you trade these positions, right? So it's just a phenomenal way to make money. Okay, all right. So with that, you can get my free newsletter, okay? That we put out there every Monday, Wednesday, and Friday, and then we're going to be sharing these positions in the newsletter because this is basically a brand new strategy that we're using on with Ike. Ike basically, this is his sweet spot with his trades. And we're going to be putting these positions here every so often so that you can share that with us. Okay. All right. So number one, it's time to break those barriers. Okay. So will you keep doing what you're doing and hope that one day something will stick, or will you finally take the steps that you're going to take, right? That works. Okay. So it's a no quit attitude, commitment, discipline, and having an edge, right? And you get that, right? So what would you want to follow our trades while you learn the buy right strategy, okay, that we've outlined? And of course, if you look at the performance on that, it's amazing. I mean, it really is. So yes, it's a great way to make money, okay? So remember what we talked about. Interested in learning new strategies? Check. Desire to see your account grow month over month? Check. 3, find the right strategy that provides consistent trading results. This is it. I mean, all 3 of these are right in line with what we do here. Okay, so it's successful. It's very, very successful. So we have a stock pick service, okay, and we're going to that bonus. Normally it's $49 a month. We're dropping it now to $29, okay, for basically until Sunday. So it's really a great value for doing this, okay? So yes, I mean, some of these stocks are pricey, but some, you can do these with smaller amounts as well. But this is a great strategy that works week after week after week. Okay. All right. So so the income here is amazing. So we have live chat groups, okay, and then one-way chat groups, okay. And so when we put out these positions, right, you're going to be able to get these and use them in your trading. Okay. All right. So we have great subscriber messages that we have here, and you can read these. So these are from real subscribers that have had this service, all right? And now for $29, I mean, it's just a no-brainer, okay? So with that, let me see what I got here. Okay, so these are the additional trade channels that we use. There's one in here that we just put in, and it's called Ike's Rockets. Ike's Rockets, and we started with that, and we're going to be incorporating that one as well. Okay, so these are the portfolios that we have: buy right strategy, RSI trade, swing trade, dividend portfolio, ETF portfolio, and a Mag 7 portfolio. Okay, and these are all trades that Ike does. And he's been doing this for a long time, guys, right? And he's a great trader, really great trader. All right, so is this for you? If you want to learn a step-by-step process to gain income in a market that goes up and down, and you want to break those series of losses and earn consistent income, this is it. Okay, so this strategy, or these strategies, are awesome, right? So let me share here the offer for you guys. And again, it's normally $49, but we're dropping it in half to $29. Okay, and so you'll be able to see that offer now, and hopefully this is a great way to learn how to trade these types of positions. Okay, so again, what you get: SOS Stock Pick subscription, limited time, $29 a month, normally $49. All 6 portfolio strategies, and we have one more as well with Ike's Rockets, and a buy right strategy, ETF portfolio, swing trade portfolio, dividend portfolio, long term, RSI trade portfolio, so that's an indicator, right? And the Mag 7. So and so you get the traders chat room as well, that you can talk about what's going on, and it's a great way to make some money here. Okay. All right. So, we also have a nightly and monthly watch list. I forgot about that. So Ike he creates a watch list every day, and then we use those to trade. All right. So with that, hopefully, it's a quick webinar this time, and hopefully you took some value from this, and I hope that you take our offer. And it's $29 is not it's not a lot, but you'll be able to trade these with a great value that we have here. Okay. So let's see here. Some of these are high in price. And leaps, could be a substitute, for that. But if the price drops a lot, then you can get hit pretty hard with with doing the leaps with that. Any other questions for this? Okay. Well, thanks, guys. Thanks for sticking around for us, and hope to see you in the Stock Pick service. All right, guys. Thanks, and have a great day.